Hello again, traders. Doing trade video once again from JFX, Swing Trading Mentoring. Going to be taking a look at the recent false consolidation breakout reversal that took place on the 4-hour chart of the US Swiss franc, which unfortunately would have led to trading losses for many traders as a result of this sharp bearish reversal. So I'm going to be taking a look at the two main factors that were responsible for this reversal, which once you're aware of these two factors when it comes to consolidation breakouts, you'll be better able to avoid many of the market traps that the market sets for us when it comes to these types of setups. Now here you can see the setup on the 4-hour chart of this currency pair a few days ago, where basically what I thought was happening was that the market was in the process of forming a range consolidation setup. So based on the nature of these bullish and bearish waves that have been formed so far, and the fact that the market was about to start a bullish breakout above this pennant, it gave the impression that the market was going to be providing us with additional bullish and bearish waves that would eventually lead to the completion of this consolidation setup. So what was taking place here in this situation right now at that point was that the market had formed a small pennant consolidation setup and had provided us with this strong bullish candlestick formation, bullish candle, that was breaking above the resistance boundary. So on the face of it, it looks like the start of a strong breakout bullish that would eventually take us towards this area here at the resistance point and potentially provide us with a trading opportunity. Now, consolidations are formed across the currency market and across all time frames. And what we can do when we spot these types of consolidations is to trade within the boundaries of resistance and support while these boundaries are being formed, and continue to trade them after they have been formed as well. And what we would do is essentially continue to look for bullish and bearish signals that take us between these boundaries and continue to capture trading gains until the consolidation finally breaks out. Of course, depending on the situation and the size of the candle and the size of the consolidation, we can also trade these breakouts and capture trading gains as well. So consolidation setups are very profitable setups that we will see across the currency market, both in terms of movements that take place within the boundaries, as well as breakouts that take place either bullish or bearish. So that was the setup on the 4-hour chart in terms of the expected formation of this range setup, as well as the breakout from the small consolidation setup that would be part of this larger formation of consolidation. Now, despite the breakout with this strong bullish engulfing candlestick formation above resistance, there were two reasons why I expected that the market would actually fail to carry this movement bullish and would instead reverse sharply and take us back inside of the consolidation. Now, these types of reversals are what we call false consolidation breakout reversals. Essentially, what takes place in these situations, as explained in the trading manual, is that the market will attempt a breakout at one end of the consolidation and then reverse sharply to take out that breakout attempt candle, taking us back inside of the consolidation and starting a breakout at the other end of the boundary. So that generally is the main structure of false consolidation breakout reversals, which tend to lead to sharp and aggressive movements that take us back inside of the consolidation. Now, as you will also see explained in my trading manual, when it comes to breakouts from daily chart consolidations and the reasons for false consolidation breakout reversals on the daily chart, there are 5 main reasons that we generally see that are responsible for these types of reversals. The second reason is the one that was applicable both on the daily chart as well as across all time frames when it comes to consolidation breakouts. So essentially what can happen is that the breakout candle can be too large, and because of the significant size of the breakout candle, what it is telling us is that the market has essentially overextended itself and thus has a strong chance of reversing and taking us back inside of the consolidation. So in this case, the market did provide us with a strong bull candle, but based on the size of the candle, it was deemed to be too large and a type of candle that normally leads to a reversal. So similar to what we see here with this even larger bull candle, you can see that the market did not really respond and move bullish, but instead eventually U-turned and provided us with this reversal. So it's a similar concept here when it comes to consolidation breakouts, where the market will provide us with a breakout signal that is too large and actually represents an overextension of the market, and that overextension will actually lead to a reversal that takes us back inside of the consolidation. So that was the first reason that I expected that the market would reverse and take us back inside of the consolidation. The second reason had to do with the fact that this bullish movement and this bull candle, if it actually took place, we would actually have been trading against the main direction of the currency pair. Now, based on the theory of trends and trend lines, what you will find is that movements that take place against the main trend direction are generally risky to trade. Some of them can be profitable, but the movements that take place against the main trend direction, generally speaking, tend to be very risky and not worth the effort in terms of trying to trade them. So the better option is always to trade in the direction of the main trend direction, because you will have significant support from the major players in the market compared to what takes place when you're trying to trade against the market direction. So as you can see here on the daily chart of the Euro Swiss franc, the market was in a strong downtrend that allowed us to draw this strong downtrend line. It was comfortably below this downtrend line as well, and all of this was taking place within the context of the bearish breakout that was taking place from this pennant consolidation setup. So a very strong downtrend was in place, and as you can see here, based on where we are, we were definitely still below the trend line. And so the priority in this case is always to assume that the market is going to be continuing the movement bearish and only focus, and therefore we should always focus on trading bearish opportunities. So that was the second reason why I thought that this breakout bullish had a very small chance of actually working out and providing us with a trading opportunity. And as you can see here on the 4-hour chart, the market did in fact reverse, taking out this bullish engulfing candlestick formation, moving sideways a little bit for a brief period above resistance before breaking below the boundary and taking us back inside of the consolidation and back towards the support boundary. So if you were not aware of this situation and those two technical factors that were basically telling us that this was a risky option in terms of a bullish movement, chances are you would have been caught up by this reversal and would have experienced a trading loss. Because when it comes to consolidation breakouts, one of the areas, the best area to place your stop loss is within the consolidation, somewhere here, perhaps underneath the low of the formation that started the breakout, or even at the opposing boundary of the setup as well. So those three stop loss areas would have been taken out by this reversal, and unfortunately it would have led to trading losses for traders who were not aware of the potential of this reversal. So that's it in terms of this situation and the analysis on the Euro Swiss franc. Those two factors, the size of the breakout candle as well as the fact that we're still in a downtrend, were the two main factors that were responsible for the reversal that took place on the 4-hour chart. Again, consolidation breakouts are very profitable when it comes to trading the currency market across all time frames, but we have to be aware of some of the market traps that are associated with these types of setups. Once you're aware of them, then you'll be better able to distinguish between the ones that have a low chance of actually working out and are likely to lead to losses, and those that have a higher probability of leading to profitable breakouts that can provide us with strong trading gains in a very short period of time. So that's it in terms of this analysis on the Euro Swiss franc. As usual, if you have any questions, you can let me know by emailing me at shepherddoing@gmail.com. Of course, you can check out my website, swingtradingmentoring.com, as well as my Instagram page at drfxtradingboss, where you'll find a greater description of the trading methodology that I now use. You can also check out my thread at BabyPips forums, in the BabyPips forums, where I basically provide free video analysis from time to time that describe the trading results and the trading methodology that I use. Of course, if you want to check out my trading history and profile and interaction in the Dukas Copy community, you can go to Dukas Copy Bank, where you can see a brief summary of my participation in the various contests, as well as some of my articles that I wrote over the years with regards to my trading methodology and some of the trading results that I got on my live account. So until next time, traders, take care and happy trading.